are witnessing no recession. Okay, that's what it looks like. We're witnessing no recession here. What up, Slime Z in the chat? So let's take a look at this GDP, right? This is, if you can see look at my mouse here. We had a recession back in 2022, 2 quarters of negative GDP. We recovered, we slowed down. This is the slowdown, right? Q4, Q3, Q4, Q1 of 2022 or 2023. This is Q1. And now the expectations are starting to climb, right? With the strong labor market, with the housing market bottoming, the rolling recession, we now have the GDP forecast starting to bounce. So we're seeing this curve up here. So what does that really tell us? That tells us that we're not headed for recession. A lot of the recession risks are evaporating. They're disappearing. Inflation's coming down. The Fed talked about that yesterday. So you know what I'm saying? This is big news right here. It's not the single most important news, but what it tells us is forward looking. We're not seeing a recession. And that also means earnings might not. Earnings might also bottom from this point. All right, now durable good orders, right? This is part of the manufacturing recession, non-existent. Look at that huge uptick in durable good orders. This is yes, manufacturing is in a recession. It's been in a recession. We've seen the PMIs, but now we're seeing, last week we talked about new orders picking up in the manufacturing cycle. New orders up, inventories down. Now that actually plays itself out in the durable good orders, right? Month over month. This is April, May, June. So June showed the biggest print we've seen in over, a year. I don't know how many years. When's the last time we had this print? So we're near 5%. This is one of the biggest prints we've had in a while. Almost post pandemic when we had all the stimulus. So the manufacturing sector is due to recover here, right? We're seeing that durable good orders 4.7% month over month. That's huge. And we've been positive for a while, right? We've been positive for a while. Okay. Now let's jump over to initial jobless claims falling, right? Jobless claims are falling. You're not really seeing the numbers for a recession happen here. We should be going higher if we're heading to a real recession, but there's a lot of jobs up there. There's a lot of jobs out there, and that is what the data is showing us. Okay. Next we have GDP. Pending home sales. Okay, so let's look at the housing market. We've seen it. It recovered. It slowed down a little bit. Look at that recovery. This is a recovery in the housing market. We are extremely negative back in October where the market bounced. Pending home sales also bounced. And now we're headed back for positive territory. Yes, we're still in a recession in general. Let's look at the area line. Right. Let's go back a little bit. We're still in recession for the pending home sales, but it's starting to recover. And we're seeing that in the ETFs for the S&P 500 ETFs. The new construction builds are up and the construction ETFs are up also. So looks like we're recovering. Growth is recovering. Services are strong. And the goods manufacturing sector is recovering so far, month over month. Coming a little, we're a little positive month over month. But for the most part, it looks like we are starting to recover. Now, on the flip side, okay, let's make sure we didn't miss anything here. I think that's all, there's a lot of data here, but that's the most important data right there. We are starting to recover. Durable good orders up a lot. GDP revised higher. It was expected to come in too. Right here, look at it. Let me zoom in. It was expected to come in at 2%. So we came in a fourth higher. And remember, last month was the same thing. Last month we came in at 2% and it was expected to come at 1%. So how's the market reacting to this? Here's the positive, here's the negative, right? So what we're seeing is the dollar is spiking. The dollar is going up pretty strong. I'm going to go to the daily chart. Dollar's up a lot, right? It sold off yesterday. It kind of how do I say this? It kind of how do I say this? Faked us out. I'm sorry, I couldn't even think of the words. Faked us out there. So the dollar faked us out after the Fed meeting. It dropped. Powell was pretty dovish, not extremely dovish, but he was optimistic about the economy and he was pretty dovish. Now, because those GDP numbers came out so strong, we are seeing the dollar spike, mostly because yields just went higher, right? Bond yields are saying, okay, if the economy is recovering, if we're not headed into recession, why buy bonds, right? Bonds are for protection against growth. That's why you buy bonds, for protection against growth, but growth expectations are higher. So that means we're going to sell off bonds. That means bonds are selling off. And when bonds sell off, right? When bonds sell off, the yields on those bonds go higher, right? And this tightens the financial conditions. So we're actually seeing financial conditions tighten, but for a good reason, because the economy is stronger than expected. When he slows down, he also said that as we near 2% inflation, he's gonna pause rates and cut rates before we actually hit 2%. So get rid of the narrative that, oh, we need to hit 2% before he pauses. Nope, that's not what he said. Now maybe you don't believe him, but that's what he said. Okay, on the flip side, oil still surging, right? Negative. So we have a couple negatives. Financial conditions are tightening. This may result in the S&P, stalling out a little bit, but it is actually in our face. Just the S&P is still moving like the VIX is lower, right? The volatility just dropped into the 12, so we're still, so people are getting, and I think a lot of this is, even though the financial conditions are pretty tight, right? The macro is, in the intermediate term, the macro is tightening. It's for a good reason. It's because the economy is tighter than expected, and we want to see moderate growth. So the market internals, the dynamics of the market are doing what they should be doing. Okay. I still think it's a little elevated. Growth is slowing, but it's picking up either way. It is slowing month over month, quarter over quarter, but it's picking up in the expectations. And now we're seeing actually GDP might actually tick higher, right? So this is a bottoming of the investment cycle, the bottoming of the business cycle that we're witnessing, and we'll find out if that continues. I want to go to bond volatility. Bond volatility has almost slipped lower, right? That's very positive for the market, because it means that lending is going to be stabilized. Lending will stabilize. There's less lending, but the interest rates on that lending are not. The bond market is stable. The U.S. Treasury collateral is stable. Triple B spreads still falling, right? Taking risk into the market. Triple B spreads, HYG, which is this is high yield equity debt. Still grinding higher. It's pretty slow, still grinding higher though, so we're pretty straight there. Now the S&P today gapped up off this news. Also, we got Meta with 11 billion in cash flow. So far, the big mega cap tech have all beat earnings, right? And this is what we're looking for. We're looking, let me dial in here a little closer. We're looking for is are we going to beat earnings? Are we going to bottom in earnings? And it looks like, at least for mega cap growth, mega cap tech, we are bottoming in earnings. Okay. And this is S&P. Look at making new highs again. Stop zooming in on me. Making new highs again. Again. So let me, where's my am I losing it here? Where's my, they changed my indicators. All right, there we go. So S&P 500, right, gapping above prior resistance. We are so close to all-time highs. All-time highs are highlighted up there. So we had a big gap up. Yeah, we're selling off right now as I speak, but here's the all-time high, right? We're very close to the all-time high. We just keep grinding up because expectations come in better than feared, better than expected. Have we bottomed in Tesla? I'll get to those questions. What up, Hassan? What up, Manny? How you guys doing this morning? We're gonna have a short stream. I'm gonna get to some family stuff. I'm gonna take a small break today from everything, small stream. So let's get this all in. The economy is bottoming. FOMC, we got yesterday that we'll talk about the Fed later. For now, also Teladoc ripping higher out of that trend. Look for a pullback on Teladoc if you missed it. You don't want to chase it, but it is ripping higher. That is a macro trend that you want to, if we're going to all-time highs, you're definitely going to want to capitalize on something that has great an options chain, right? Long-term options. Anyways, looking at S&P, we gapped up. Okay, now it looks like we are trending at the top of the range, but we had another huge gap up. Meta crushed earnings. So far, Tesla beats bottom line, top line. Netflix beats top bottom line. Who else beat top bottom line? Microsoft beat top bottom line. Google beats top bottom line. Margins are great. They're actually starting to bottom in their revenue and their earnings. And Meta beat. So we get all the beat. We're getting mega cap beat again, right? When everything was expected to be negative, you're getting FOMO come in. We call this wave 2 FOMO. It's starting to happen. And the macro is actually tightening on us a little bit. So if we continue to grind up, it's going to be based off of positioning and sentiment. And then when the macro actually improves, right? And that's all dependent on inflation. Right now, the biggest, negative is that, hey, oil's going higher, energy prices are going higher. The headline CPI is probably going to stall because of those oil prices. But once it rolls over again, which I think it is, it's going to come down, and shelter comes down. Boom. Here we go. Wave 2, wave 3 FOMO, possibly. We might get to all-time highs regardless of high bond yields, because the expectations. Remember, the reason why the market sold off back in October, it was pricing in a great recession. It was pricing in a great recession. That's why we saw Meta tank extremely, Meta tank like crazy. All these big cap, mega cap earnings, mega cap tech stocks tanked because all risk assets tanked because they were pricing in a recession that didn't happen, right? It didn't necessarily happen. It's kind of rolling. So as we recover, we can take these rate hikes. We could take 25 basis point rate hikes for the stock market, and the economy is taking them in stride. So we might not see a recession or those rate hikes actually come into play till next year, till 2024. And by the time we do get there, the Fed reverses course, right? Smooth operations. Expectations are right in line. All right. So yeah, everything's good over here, man. Everything's good over here. And just trying to get through some of this. Now, what I did see is some divergence today on the open. Actually, let me get to the other charts. It'll be easier to see that. Before we get there, let's see. Let's make sure that we got everything. Let me double check on the. Yeah, we'll talk about Tesla. We'll get to Tesla. Let me double check on the Teladoc. I want to check out Teladoc really quick just to flag that as a long-term trade. Where is it? TDoc. There we go. Big up move, because these charts are a little easier to navigate. Let's go to that weekly chart. Got a lot big bottoming. Here it is. We're seeing the move to the upside. Look at those moving averages. Well, this is the weekly. We're above the 50-day and the 50 weekly moving average. But for the most part, you're getting all the moving averages converge, starting to get tight, right? Just like the Bollinger Bands. And when we get the golden cross, it's really going to have some momentum. So I'm waiting for a pullback in Teladoc, maybe to support somewhere around 27 to 28. Waiting for that pullback. We're getting that confirmation. The healthcare sector is also revised up. It's been down a little bit. So we're going to get the healthcare sector start to bid higher. So yeah, Teladoc, I just wanted to point that out. Teladoc looks pretty right. Roku is still struggling, but it's trending up. And I'm looking at these riskier type assets that just haven't moved yet, right? Although the S&P has. So take a look at ARK, whatever it is. And then also, who is it? Teladoc, Zoom. I think Zoom is set to really have some good earnings here. The fundamentals look good. They had a really good earnings report on the last report, and Zoom found some support down here around 68. So it got above the level. It got above this. It got above this previous support resistance level. Once got rejected, found support, and you're getting that divergence. You're getting the bullish bull cross or golden cross divergence, 50 crossing above the 100. So just the same way, right? And I missed this, the same way we saw Open Door start to cross and just exploded. I think we're going to see that in I think we're going to start to see that in Teladoc. I think we're going to see that in Zoom. We just got to wait for the earnings to come out for Zoom, but Teladoc had their earnings. So now you get earning risk off the table. And now you're looking for the blow off top. Teladoc has a lot of short interest also. So you're going to get sort of a short squeeze, which is a risk to the upside is it might run, without you. But for the most part, Zoom still hasn't really made its move yet. This still has an opportunity to get in. And I think Zoom looks really good. You got a lot of recovery there. The moving, technically, it just looks amazing technically. So you're keeping your eye on ARK. Where's ARK? You're keeping your eye on ARK because this is the leading ETF for a lot. They're holding a lot of size there. Now, ARK is getting above a historical level. It's trying to get above this 49.50. Above 50, it carries a lot of weight for these stocks. All right. Back to the, so yeah, that's the earnings outlook for sure. Right now, we're looking at the Fed. When we look at the market, what it's pricing in as far as rate hikes, it's not pricing another hike. It's pricing in a pause. Now, if the economy, recovers or starts to accelerate faster than expected, maybe we do get another rate hike. But Powell was really dovish about things. He said, hey, if inflation abates right now, we just need to focus on inflation. That's it. It's all about inflation. Before it went up, your contract expired on Teladoc. Oh man, you got a short-term option, man. No. Yeah, well, okay, yeah, that sucks. But yeah, no short terms because it's not, there's more opportunity in the bigger term plays once they start to break out. So I'm sorry that happened to you, Manny. All right, so we're looking at the Fed's hike, the Fed projections or the market expectations for rate hikes, and right here, this is where we're at: 5.25 to 5.5% target, 75% chance we hold in September. There is a Let's go to November, 64% chance we hold in November, 62% chance we hold in December. Basically, holding the hikes all the way till January. Let's see, where do we cut? Where's the market see a cut? The market is going to start seeing cuts somewhere in mid 2024. There's where the cuts are starting to project. It could be earlier than that. Again, this is basically just showing us that the market expects a pause in the next 6 months, and Powell could cut rates, and he said that he's going to pause or he's going to hold before we hit 2%. So we're near there. It's just going to take a couple months to smooth out those oil prices. Now, hey, if oil keeps surging, we might be in trouble, right? We might actually be in trouble if oil does surge past 84.50. I don't think it happens right now. We got the dollar upside move, so maybe that doesn't happen. All right, let's get to the trading charts. Maximize the sell. Like, are we fitting in here? No, we're not fit yet. Let's go. TNX. Hopefully this doesn't freeze on us. All right, and yeah, we're gonna get to Tesla. Tesla is consolidating at a level. There we go. Okay. So S&P, like I said, we had that gap up, and this is just taking away the pre-market. You can obviously see we got 456. We got some support at 456 for the S&P. This is normal, big gap up because the expectations were much better. 456, what are we looking at? 456.75. I'd say like 456.50 is probably the next support for the S&P. Gaps up, possibly comes back and fills the gap at 455 and then goes higher. This is like great price action right here. Really good price action right here for the S&P. Let's take a look at the Qs really quick. What are the Qs doing? Are they gapping up just as strong? Same thing, Qs, big gap up, consolidate lower, find support. Just finding support and then maybe moving higher. IWM, small caps. Small caps are a little weaker because we're getting more rotation into the mega caps. Dow a little weaker too, not as big as not as big of a gap up. And I think that's because Meta came out so good. Microsoft, Meta, Netflix, Tesla, all the earnings are coming out so strong that people are getting FOMO right back into these mega cap tech stocks, right? So that's what we're keeping our eye on. Low buying power. Okay. Neo seems rebounding from the bottom. Yeah, Neo. Yeah, Neo's still strong. Neo's pretty strong. Let me see yesterday. Yeah, Neo looks pretty good too. I like Neo. I mean, not me personally, but right, the real resistance is above 14 and a quarter for Neo, 14 and a quarter. Microsoft trash. Microsoft trash. I wonder what that guy's talking about. Microsoft trash. Microsoft. I don't know. You'd have to back that up with some evidence that Microsoft is trash. That's insane. Any positions that I'm taking, I'm looking to enter Teladoc. I'm already long Tesla. I'm long Zoom, but I'm looking a little further out. I do little different types of option plays here, and I don't expect other people to copy that because my capital is different. But definitely looking at Teladoc here, right? And this is why TDoc. I guess we can go over the levels for Teladoc here. Let's go to the daily chart. I'm looking for a long play. Now, look, the all-time high for Teladoc is around 300. I don't expect it to get there anytime soon, but a big blow, right? A big relief rally could take us to 100 pretty quickly. Just based off the macro. And if the fundamentals keep improving, then yes, it can go a lot higher. In the short term, it probably runs to about 40, gets stuck, and then it needs another, catalyst to get us to 56. But again, looking deeper into Teladoc, let me see, make sure I'm not in the way. Let's move this up a little bit on YouTube. You saw we got above this this trend, this ugly trend. We got above it, and we formed a really strong bottom here. We've been forming this bottom for what, 6 months, 7 months, 8 months. We're above that. So I'm looking for the pullback in Teladoc. I'm going to look for the pullback and consolidation somewhere around 28, 27. It's kind of tough to say. It did fill this gap here at 29.40. It might be sooner. It could be sooner than that. Also, I'll be looking at the S&P once it fills the gap and turns back up. But for the most part, I'm looking for some type of consolidation on Teladoc. I want to see a sharp pullback, a consolidation somewhere around here, right? Somewhere around 30, 30 and a quarter to maybe 30 and a quarter to, it could just hold this bar, 30 and a quarter to 28 and a quarter, right? I'm looking for some type of consolidation here. Those moving averages are moving up before we move higher. All right, let's go to Tesla. Jump over to Tesla. Market is strong, right? The market is strong right now, and it's moving up in the face of tightening conditions from the dollar and bond yields. Bond yields are tightening, which is unfortunate. But again, they're tightening for a good reason, not because of inflation. Usually, it's inflation the reason that bond yields are tightening. It's not inflation; it's a strong economy, which is the expectation for maybe stickier inflation. So, it's kind of a neutral. I would say a neutral um situation here. We're kind of neutral. It's like, we'll see how it plays out over the next couple of months. But earnings is the biggest catalyst, and so far, earnings are doing well. Man, the dollar is strong though, so I don't like that. Dollar very strong. That's not going to be good for risk assets like crypto. See, really quick, let me see what Bitcoin is doing. I haven't even looked at crypto yet. Uh, Bitcoin had a nice surge yesterday, but it's still consolidating. Crypto's still consolidating. All right, so Tesla's finding a lot of support on this trend. Obviously, we're trending up, right? We had that big blow off top, and then everybody thought it was over. It went up again, gapped up, started making another move. We got to earnings, sold off on earnings, gap down. So we have that gap to fill up here. Once we fill that gap, then we can tell whether we reverse back down and consolidate, or we get above it and start to see real momentum. Because this shade right here, this 300 to 315 is where the next shorts are. The next shorts are at 3 to 315, that $15 range. They get squeezed, Tesla's going to 400. Tesla's going to go to 400 in my view. If they get squeezed above that level, because that's kind of the last line of defense. We already broke the big long-term downtrend. We're consolidating higher. There's still a lot of earning. There's still a lot of catalysts too, right? Let's go over those catalysts really quick. Let me go to my Twitter. Because I did, there's a guy, Gary Black, he talked about the Cybertruck coming online. He thinks a lot of people are going to buy into the Cybertruck. And the way they did it with Model Y, right? A lot of pre-orders for Cybertruck. Come on, dude, come on, internet. Let's go. We've had some internet problems lately. Yesterday, I didn't even think I was going to be able to stream today. My internet went out. Come on. Oh, this is not Twitter. This is X. My bad. X. Okay. Why is the economy so resilient? Home ownership. Oh yeah, we'll get to that. I'm not going to go into that yet. Yo, come on, X load. Anyways, you got the model. You got one of the refreshes. Come on, Gary Black, where you at? You got one of the refreshes. Let me just go to this dude's. Just go to this dude's. I can't be having these slowdowns. Oh, also China stimulating is going to boost a little bit of the demand for Tesla. Okay, here's the catalyst for Tesla going forward, right? In Q3, we have stabilizing auto gross margins. Gross margins were the thing that we needed to stabilize. We were near 25 in 2021. Early couple of years ago, we're at 25%. Those have been dropping, but it looks like they've started to bottom, and that's when the market really starts to bid up, when you get a confirmation that gross margins are bottoming, and gross margins are bottoming, right? Gross margins are bottoming. We saw that they actually came out better than expected in the last earnings report. We beat for Tesla top bottom line revenue and margin expectations. There wasn't a whole lot of negatives. It's just price ran up so quick. We ran up so high into earnings. There had to be a relief rally, right? So the shorts are going to try to jump on the train. Let's go lower. And we'll go over the levels where we squeeze the shorts in the intermediate term before we go higher from there. Either way, Cybertruck deliveries Q4, that's going to be a catalyst. Fed pivot on interest rates, which is going to help with margins. If the Fed does lower rates again this year, at the end of this year, then margins can go up because they can now increase prices again. They lowered prices to help people with the interest rate payments, right? Higher rates, higher payments, lower price, keep it even, keep your demand there, keep your customers happy. Now, the good part is that the commodities are falling. So what Tesla pays, or what Tesla the how do I say this? What it takes to build the car is getting cheaper. So that should actually help out with the margins too. So this is just a margin story so far. You get that 7,500 EV instant rebate in I think at the beginning of 2024. Tesla's are talking about a $10 billion buyback. They never do that. That's going to be insane. You're going to take shares off the table. You're going to remove supply while the demand is so high. That's going to be very bullish. So yeah. Anyways, Tesla has a lot of catalysts coming up. It's very, whatever kind of stock. So what we do need to get above is this 270, 241 level, right? Because right now everybody's looking at the reverse head and shoulders. They're saying, okay, here's the shoulder, here's the head, here's the shoulder. We're going to roll over. We're going to go lower. Now this is a bearish how do I say, this is a bearish pattern, but it doesn't matter what the bearish pattern is, because the macro and the fundamentals are such a larger part of this story. So patterns are going to give you, technicals are going to give you some insight into what's happening in the intermediate and how things are looking on the macro, but they don't just play out, right? It's all about the catalyst. We see buyers stepping in here, and we need to get above that level. So we're consolidating. This is bearish in the short term between 270 and what do we got? 262. We'll see if this base can hold here, 270 to 262. Really tight base there, really tight base. And then you have the S&P pretty much bidding up as that base starts to form there. Where's the Dow? Is the Dow beating up? Can't see it yet. So Tesla had so many entries. If you missed it, it's perfect. Microsoft trash. Oh, people do think Microsoft's trash. Okay. I mean, I don't think so. Microsoft is definitely not trash as a company. Maybe because it's up so much. Yes. Microsoft is up a lot. Or maybe people tried to trade it and got smashed, but this is a good entry for Microsoft. They are leading so far in the AI, generative AI. They're leading right now. They have a lot of cash flow. They're going to do well. They're just up at all-time high. So is it the best risk reward? No. But Microsoft isn't going to slow down. You have these sharp pullbacks and it just goes higher, right? You have these sharp pullbacks that goes higher. So fundamentally, no, not trash. On a fundamental basis, it is literally the second largest S&P company. So Microsoft's going to remain strong. It's not going anywhere anytime soon. But is there better risk reward out there for a hold? Yeah. If you have a lot of money, is it going to preserve your capital? Yes. It's like Apple, right? It's going to preserve your capital. So in my view, no, I don't think Microsoft's trash at all. I just don't trade it. I don't mess with it. I'd rather be in Tesla. Oh, oh, what the guy said is trash. Yeah. The guy said Microsoft. He probably doesn't even know why Microsoft is trash. Just because he probably has an iPhone. I have an iPhone too. And he probably says, "Oh, Microsoft is trash," just because he has an iPhone and Android, or maybe he doesn't have an Xbox. I don't even know. Don't think the market is overextended, or is this normal bull run to break to previous highs? This is McGuire. Don't you think the market is overextended? Yes, the market is overextended, but the scenario that we're seeing, this is not a normal market. What we're seeing is people are under positioned. They're positioned in cash. They're under positioned equities. So they're going to keep calling for overextension. Now on a technical basis, let's look at the technicals for the market really quick. I only got like a couple more minutes before I got to go. Now look at the RSI, right? Look at the RSI. The RSI. Oh, I'm in the way. Let me move myself over so we can see this. The RSI is not oversold. Okay, the RSI are not, yeah, overbought. My bad, not oversold. The RSI is not oversold. So RSI is pulling back and trending higher. So we got the technicals on Facebook, by the way. Oh yeah, exactly. Asan, 100%, bro. Let me throw your comment up there. Since people are left behind, they start to trash talk about Microsoft. That's what people do when they miss a rally. Microsoft, Apple, whatever it is, they trash it because they want it. They're pissed they missed the rally, so they trash the stock. It's really stupid. I do the same thing in my head. I get pissed if I miss something. I'm like, oh, come down. I want it to come down, but I'm not going to trash the stock. I mean, it doesn't make any sense. Second largest stock in the world, and you're going to trash it. It sucks. Okay, right. That's just pure emotion. Come on, start working for me. Anyways, this is not an overbought rally, right? It's not overbought. because the RSI tells us that the buyers keep stepping in regardless. Buyers are stepping into this rally, and it's going to take a strong catalyst to bring us lower. And I mean, you got to follow the newsletter so you can see. Oh, McGuire, if you're just stepping in here, then it does feel like this is so oversold. We've been calling for this rally to squeeze higher to all-time highs for the last 2 months, ever since we got above 4,200. And the biggest reason is inflation is making progress lower. Inflation's falling lower, and that's the biggest concern for investors. Retail is jumping in quick, jumping in right away. Professionals haven't really got in yet. They're still packed with cash, but there's more liquidity coming in the market regardless of what you hear. The government is printing stimulus, infrastructure bill, CHIPS Act, all kinds of that's why that's why the economy is still strong, because of the fiscal stimulus, the government stimulus, the White House, signing more spending. That's why we're not going into recession, and inflation's coming lower because, I mean, productivity is starting to pick up, and nobody sees the supply side of inflation. They don't get it. They just think, oh, more demand, higher inflation. Nope, that doesn't work that way. You need an imbalance in the labor market. You need an imbalance on the demand and supply side for inflation to ramp back up. So also positioning, right? Sentiment. People are very negative, and at the same time, they're playing catch up. They're trying to play catch up, so they keep buying. Once you break to all-time highs, there's going to be another short squeeze. So is it overextended? Technically, yes. Technically, the rally's a little overextended, but there's a reason. Oh my God, this thing is pissing me off. There's a reason why we're overextended. There's a reason we're overextended because of FOMO, right? So you can sit there and miss the rally at 4,200 or 4,400 and say, oh, it's overextended, I'll wait for the rally. You're going to wait till all-time highs before you get in, right? That's what's going to happen. People are going to get to all-time highs and then finally get back in when everything starts to relieve. So is it overextended? Sure. But the market can stay and remain overextended for a long period of time. Once everybody gets bullish, once everybody's in the market, then the professionals, then I would say, okay, the overextension calls for a pullback at some point. But right now, people thought there's going to be a huge recession, and we're not getting the recession. They thought that inflation was going to go back up. It's not happening, although it may stay a little sticky over the next couple months because of oil prices, right? But yeah, it's not really overextended. And I'm always open to debate anybody. A lot of people don't really say, why do you think Microsoft tanked after earnings? Bro, Microsoft tanked after earnings because it's trash. That is bro. That's like, oh my God. I mean, go look at the trend. Microsoft, literally look at the performance of Microsoft. I know I shouldn't be getting this, this little argument with this guy. It's not even an argument. It's just like, bro, after earnings, it's trash because it tanked. Okay. Really? That's your because it tanked after earnings. So every stock is trash when it tanks after earnings, even though it recovers higher than where it was at after that. So I guess you could say something is trash in the next 3 or 5 days or 2 weeks. But if it recovers, you have to reverse what you said, right? Something is trash when the balance sheet sucks, when they have no revenue, when they miss guidance, whatever it is. Microsoft just ran up a lot. And there is no answer for earnings, why price moves up or down, right? There is no answer. Tesla beat everything and they went lower because the price already ran up. So you got psychology, technicals, and fundamentals all playing into the market and macro all at the same time. That doesn't make something trash because it sold off after hours. That's really I mean, I don't know. That's an elementary mistake right there. Are you still looking to buy at these levels? It really depends what it is. It really depends what it is and what my position is. Buy at these. I'm not buying S&P 500. I'm not buying QQQ. I'm not buying that stuff. So Tesla, yes. Bitcoin, yes. Crypto, I think crypto is going to launch pretty soon. Crypto has the most upside by far, in my opinion. Thanks for answering my question. Oh, did you answer? Did somebody ask a question? Oh, okay. Yeah, I did ask a question. What about sitting in extreme greed? We're not in extreme greed. Retail investors might be buying, but that's not where the big money's at. The big money's in fund managers, and they're not even in yet, right? They're still overweight cash. They're underweight equities. They're underweight stock. They're dipping their toes in little by little. And if you want to see the charts for that, just follow the newsletter, free link in the description. I have so many charts. You can go to the website and see all my past reports on the market. So far, we've been pretty right. Now in this next report, I'm going to have to signal, hey, oil prices are the big risk here. But for the most part, dips are going to get bought up because there's so much cash on the sideline. These earnings are starting to bottom, right? Earnings season looks like it's going to be bottoming here, and the dips are getting bought up. You do need the dollar to come down, though. You need the dollar to come out. The Fed is becoming more dovish, right? The there's enough liquidity coming into the market. Global liquidity is starting to turn around. Yes, China is weak, but China, it will keep printing. The as a whole, if you're going to look 6 to 12 months out, yes, you can buy at these levels. You can buy at these levels if you're looking 6 to 12 months out because everything is starting to improve. Will it pull back? Sure, right? But the big pullback here, if you're on YouTube, so you can actually see it, and if you don't see the charts, it's kind of tough to understand that. But we do stream Monday through Friday. We go over the technicals, fundamentals, right? The new news, the correlations, all that stuff in the market. Also, the Dow is up for 13 months in a row. Never has happened. We've actually retraced. I think the S&P retraced from the lows more than the sell off. Tom Lee talked about this. Never happened in a bear market. This is not a bear market. I don't know what people are smoking. They're smoking something because this is not a bear market. We're almost at the all-time high. Oh, we get there and we sell off, sure, but we're grinding higher. The trend is up, right? The trend is higher and it continues. And there's a lot of reasons for that. We go over it over and over. So if there's going to be any level of support that the S&P comes back into, it's going to be this 4,400. I'm still looking at it. Something bad could happen. We could get a big retracement into 4,400. I wouldn't chase the S&P at these levels. I wouldn't. I'll be looking at individual stocks who still have room to go, who still have good catalysts, good earnings, and a good expectations going forward, right? But S&P 4,400, that's what it looks like it can pull back. That's the strongest level of support. So yeah, 4,400 probably for S&P. Sitting on extreme greed again. Like I said, retails might be on extreme greed, but it's not even extreme greed. It's really not extreme greed. There's just mega cap has moved up. There's market breadth, right? You're getting rotations into Dow. You're getting rotations into IWM. You're getting rotations into the equal weight, S&P equal weight. So no, not having. How do you feel about Amazon? Amazon still hasn't moved yet. That's a really good question. Amazon, from all the big tech, AMZN. Oh man, I really got to get going here. I'm supposed to meet up with some people. Amazon looks solid. Look, I'm going to say this right now. Amazon looks good for an investment. If it's a trade, if it's a trade, like there's so many aspects to a trade. What is your time frame? Where are you entering? There's a bunch of things for a trade. I would never advocate, oh, you just get long anything. Now you could get long options on Amazon. You could get some leap calls, but those are going to be maybe, you have to see if those would actually fit and know what you're doing. So trading takes more than just that. But as an investment, Amazon has a long way to go. They're still one of the big leaders in cloud computing. Everything is ran on Amazon AWS. They still have a lot of cash flow. Retail might have slowed down, but now we see the spending is starting to pick up. Amazon is a good risk reward at these levels. Has a lot of support at 125. So Amazon looks solid. Amazon does look solid. Yeah, Amazon looks great. Meta just exploded. They had so much free cash flow. And who else do you got? Amazon, Apple, Google. I think Google just took off. AMD is setting up. AMD is also setting up again. AMD has a gigantic wedge here. It's taken me a while to figure out how to, what it's trying to do. But once this wedge breaks out in AMD, AMD is going much higher, right? You're seeing this big wedge start to take place. And once it breaks out, it should be very strong. So yeah, those are my thoughts there. Being trash and being in his all-time high. Yeah, I know something is trash at all-time highs. Silly guys, man. People just like to run their mouth or just say stupid things really quick for attention or because it makes them feel. They probably miss the rally, but you can't be stupid, man. You can't be stupid. You got to recognize that something sells off after hours. It means it's good. There's companies that are trash, that are actual trash. They gap up in after hours because of a short squeeze. That doesn't make the company good. It just means there's a technical short squeeze, just like Carvana. Carvana is not a great company, but they're exploding because of the short squeeze, right? And it has a small market cap. And yeah, anyways, they'll all be fine. This is a bull market. And to finish off here before I got to get going early today. I'm trying to think, what is the most important thing here? You got Amazon after hours, of course, coming into the market. But I think the biggest thing here. Oh, let's talk about the Fed. Yeah, let's talk about the Fed really quick before I hop off of here. We'll talk about the Fed. I'll keep this on the side. And we did the Fed meeting yesterday. USPT over 70. Yeah, USPT is pretty good. And I'm just going to say this right now. Me personally, Bitcoin is going to rally pretty strong. If you're talking about time as we head into the cycle, Bitcoin is going to outperform. Ethereum is going to outperform. And it looks like Chainlink will be the main catalyst, will be the biggest crypto coin it's not a crypto coin, it's an actual infrastructure for tokenization, for the tokenization of all assets. It's going to take time, but they're ahead of everybody by far. Best Oracle, everybody's using them, proof of reserve, CCIP. Chainlink is probably the best bet that I would say that can do an easy 10x, and over the next 3 years at the end of the next cycle, probably do a 50x, right? If they execute the way that they are, and they are executing global, they're connecting to the global institution central banks. Central banks are banks, institutional banks over the world to tokenize their assets on chain. Everybody's trying to move their assets on chain. You heard BlackRock talk about it, Larry Fink talk about it. And it looks like the protocol that allows that to happen, to put things on chain and interoperate with all of the protocols, is going to be CCIP, which is Chainlink. Okay, so those are my thoughts in the initial, because eventually this thing is going to explode. Chainlink is going to explode eventually. This is not, hey, a call to action. Do your research. Read some of our research. We're going to come out with that pretty soon here, or just look into it yourself. But anyways, what did the Fed say? So yesterday, let's sum that up really quick before I go here. Powell is very positive. He's optimistic about the economy. He says, hey, now our base case is there is no recession. We see that growth actually comes back up. So we're gonna stay data dependent. So that means, and he also said we're going to be looking at business activity, which are in all my reports every single week. We're going to be looking at obviously inflation, which is in our reports, different types of inflation, and we're going to be looking at what else he say? He said business activity. Oh, the labor market, right? The labor market. So we always keep our eye on the labor market also. And we'll keep our eye on that going forward. So, and it appears that he also said that we're going to pause before we get to 2%. Remember, next month I think we do hit 2%. Maybe we stall, but we could drop a point, right? I don't know. I really don't know, because oil went up fast. So maybe the next month print is at 3.1%. I'm gonna call inflation. It's at 3% headline right now. Maybe it goes somewhere between 3.2 to 2.8. So we could shoot under, we could shoot over a little bit. We'll see how that plays out. But we all know, because of energy prices, so once they slow down, and even if they stay there, it'll still come down, because it's a base effect. It's a year over year metric. So we'll see how that comes in. But Powell was very optimistic about the economy. He's said that, we can cut rates if inflation gets low enough. So I think now at this point, it looks like if we do get oil to roll over, that he might actually cut rates in late second half of this year. So maybe the October, November, December, I could see him cutting rates around that area, because oil should be right back down. Oil should roll over around that time. I know some people don't believe that, but oil should roll down. The economy slowing down. Maybe it stays sticky. Maybe nobody cares, right? I don't really know at this point, but we're going to keep tracking this information. The housing market is bottoming. GDP is getting revised up against everybody's concerns. I mean, against everybody's expectations. So there's FOMO. This is wave 2 FOMO. We're seeing it. Earnings are starting to bottom now. Companies have drawn down in their revenue, been able to retain it. And I think we're going higher. Your thoughts on AMC? I think AMC is trash. I'm just going to say it straight up. AMC is trash company. They have no future prospects. I think it just sucks people in with the narrative, but AMC is trash. Look for something better than that. In my view, that's just my opinion. Maybe you like it. Anyways, yeah, that's all I got on the macro. Hey, we're looking for the dollar to roll over. That's going to be a big signal. It just hasn't happened yet. It retraced back up, but I think it gets rejected. So, hey, Amazon earnings after hours. We get Apple next week, and we'll see if we can get to all-time highs. I think that's where we're headed. Appreciate you guys. I will be on again tomorrow morning. Yeah, I don't think we have any disruptions tomorrow morning, so we'll come on tomorrow morning, look at Amazon earnings and all that, and see what happens. All right, guys. Appreciate you guys. I got to get going. And hey, I'll be on again. Subscribe to the newsletter if you haven't already. Free. And make sure, if you get the newsletter, if you subscribe to it, link in the bio, make sure you check your email, because a lot of people, there's like 30 people who never check their email. Check your email to make sure that to confirm it's you. Okay. All right, guys, stay blessed. Take care. We'll see you later.